I'm still not used to it. I just saw a German auction come out with those negative interest rates. Are negative interest rates coming to a theoretical, rational, or believed end? Are we at a point where a lot of institutional global Wall Street saying, wait, this isn't working?
Well, I think we're at the end of the rope in terms of thinking negative rates have a capacity to stimulate the economy. That doesn't mean we're at the end of the move into negative rate territory. I think the advent of negative rates partly reflects the scarcity that's been created by QE programs. And because I think these QE programs are the norm for the next couple of years, you can see even more negative interest rates. You won't get growth out of it, but you can still see rates go down.
The distinction here is authorities, people that have to instill public and institutional confidence, say it's not QE, we're doing repo, we're doing this or that. I didn't hear that from you. It's some amalgamation or mutation of QE into something new. What's the new QE from where you stand?
Well, I don't think the European approach is new. It's standard increases in the balance sheet, increases in bank reserves to purchase bonds. I think what the Fed is doing is distinct. There's the possibility that they're going to be increasing the balance sheet and purchasing assets in response to that. I wouldn't call it QE because the size is going to be so much lower than what the Fed did in 2009 through 2012, and also because they'll probably be buying securities across the curve as opposed to targeting a specific point to lower interest rates. So the Fed is where QE does not really apply, even if the balance sheet increases somewhat. But what the ECB is doing, I think, is very standard.